All right, good evening, ladies and gentlemen. This is Clueless A Trading Frank. This is a free market update webinar for the benefit of all members and free trial subscribers. Quick update on the action in the markets. Full disclosure, this is purely for financial education and not for any solicitation or advice. It's September 12th, 6:37 p.m. Eastern Standard Time. Session will be uploaded. This webinar update will be uploaded on the Clueless 8 YouTube channel. And a very strong reminder that every single member and free trial subscriber can easily for free put their emails and subscribe directly to the Clueless 8 YouTube channel. Tell your friends, tell your uncles, aunts, grandpa, grandmas, I don't care, because it is available for the public to see on all the free stuff. So they have an idea of what all the phenomenal stuff that we do here within the Clueless 8 trading community. As you know, I do not advertise on any paid advertisements and things like that. Almost all our members come from referrals, and that's that's just the way it is. We like to be a little bit exclusive. We certainly want to grow our community to a much larger level, and it's certainly doing that in between attrition. And I certainly would highly encourage all members and to all members to go out there, spread the word, tell their friends, and let them try us out. Because the bottom line is that the type of stuff that we do here in the most difficult of market circumstances, and I underline that, most difficult of market circumstances, in my opinion, is bar none one of the top performance trading services that's out there. No question about it. Now, saying all that, we have hi Lizzie, how are you? Thanks. Glad that you could make it. So let's kick off by I don't want to go into the same old stuff. We covered quite a bit. The video is out there. It's 2.5 hours long. In fact, like Corey mentioned earlier, and some other people did, I've covered pretty much everything that happened. The probability of what might happen on the upside, because it is a game of probabilities, not a game of certainties. That's that needs to be etched in every single trader's and investor's brains. That we measure on a level, just like in life and in trading, we measure the probabilities of risk and reward. So all that was laid out in finite and excruciating detail last night in the ACS coaching webinar that is available for limited viewing till late tonight. And those are for paid students primarily, but I just want to give a quick idea what we do in those ACS sessions so that others are motivated on their own to learn, absorb, and apply. Learn, absorb, and apply to their own trading and to their own profits and to their own financial happiness, because that's really what it's all about. We have a new ACS member who is extremely passionate about learning. Will, I'll mention Will, and I'll tell you, just anyone wants to know, like in one single day, what he absorbed and what he applied and what that resulted in. He's a prime example of it. And as time goes on, the passion, the learning, and all the content that I'm delivering mixed in together. I just can't imagine how anyone can lose. I mean, lose in the sense that anyone can, of course, you're going to have some losing trades. There's no question about it. But how anyone can basically not benefit, that's a better way of looking at it, from those type of training, because that's really what it's all about. So saying all that, we have, okay. We have other people joining in. All right, so let's what I'm going to primarily do tonight is I'm going to go through every single one of the charts that I posted today. All right, and I'm just going to ask a couple of quick questions. Feel free to answer. You don't answer, that's fine. It's not like you're not in kindergarten or high school right now. But so from a standpoint of what happened on Friday, to what happened today, what's the first word that comes to your head? So I'm going to start off by asking, and think and answer. Don't give me some sort of like, banal answer about like, something that we already know. But what really catches the eye? And I've mentioned that a lot. So I'll start off by Corey. What's a 1 or 2 word answer between Friday and today?
I think basically like what you were saying before, that the bond market crashed, so you
No,
had
no, no. I don't want the economic definition. I mean, when you look at visually what happened today versus thing, what do you think? I should clarify my question. What do you think was the most commonality between Friday and today?
basically short covering.
You're giving me the reasons, but what do you actually see on the charts when you look at something like this, for example, that I put at the end of the day, and this should provide the answer. You're giving all the right answer. Yeah.
Well, basically, the chart you just put up, it looked like it touched the bottom of the Darvis box and it then bounced off of it.
No, no, no. Look at this chart that I just put on right here. What's the first thing? If I asked a child, like, okay, what do you see in that? I know they see colors. So I'm looking for
a V pattern. A V pattern?
Correct. So you're close. So, I'll take that, but I'll give you the exact name. Lamont, can you step up and tell me?
Symmetry.
Thank you. That's the answer. All right? It's exact pattern symmetry. Humans can do that. Thank you for answering that. It's symmetry. It's pattern symmetry. If we train ourselves to know nothing about the stock markets, which the algos don't, by the way. The algos don't sit around, have coffee, and argue about the central banks and Janet Yellen and what's her name? I can't even say it. Lael, the Brainerd, or Rosengren. Algos are simply looking for patterns, mathematical patterns. They're looking for levels, pivots, the key word. I mentioned it at least more than a dozen times today. Pivots, right? I even put it out here. And resistances, supports, internals. That's what they're looking at. Now, I'm not saying we're not robots, or else I'd have taken all my money today and put it in there and had a $500,000 day. Or more, maybe $1 million day. We're not that crazy. Maybe sometimes we should. Keyword that I mentioned yesterday, and everybody at their own time, okay, should listen to last night's ACS video cast that's going to be open for another, probably till tomorrow. One of the key things that I said, if I can remind everyone, is you have to be the most aggressive at tactical market bottoms when, and by the way, we don't know what a tactical market bottom is till it's already done. Let's face facts. But the indicator showed some deep, deep, deep extreme oversold conditions. Minus 700 on the 1 hour charts. All one has to do is really think and look at the charts that I'm posting. They don't have to fully understand it, but when I'm posting something and showing you what the McClellan oscillators are, minus 700, writing extreme oversold, simple English. So take it at face value. It can go, yeah. I mean, has a McClellan oscillator gone to minus 1,000 on a 1 hour chart? No, I've never seen it. But the thing is, that's what you got. It's symmetry. Exactly. What's the second word that comes out? Like it's symmetry, but symmetry dominated by what? Someone else step up and tell me.
Would the word be patterns?
No, you're just answering the same, you gave me the same answer. Yeah, patterns, but they're not dominated by patterns. Who are the ones who are dominating and controlling that symmetry?
High volume?
Nah, come on, man. Yes, go ahead.
Algos.
Thank you. Thank you. Algos. Actual robots. Humans can do this. Volume means nothing. On even the smallest of volumes for weeks and weeks, right? Look at these volumes, weeks and weeks. They were like you couldn't even see them. I mean, they were still volume. Look what happened. Friday, today. Volumes exploded. Exploded. It's the machines which dominate the market. Let me just remind everyone, and please, for God's sakes, etch that into your brains. These artificial intelligence, algorithmic, high-frequency trading black boxes are meant to completely screw and mess with your brains. They mess with my brains. The reason I stay so sane and calm and guide you all through the most difficult of market circumstances, good, bad, and ugly, and you all know that every single day, is because I rely on technical charts in the most complex form, which I'm delivering to all of you in a very simple manner with big fat arrows, supports, resistances, pivots, blah, blah, blah. It's your duty and your responsibility, and I mean this, to stop fearing everything that's out there, to miss out on humongous gains. And I'm not saying somebody shouldn't exercise their right, and I mean exercise their right to basically meet their quota for the day and say, I'm sitting back. That's fine and good. But to sell way too early and completely disregarding, not disrespecting, because I really don't care whether you disrespect me or not, okay, but disregarding my multiple comments on the real-time Twitter feed saying that these pivots that in my video cast that I really diligently record and put it out there during the day, you don't have to listen to a 30-minute video cast. You can just take that. It's called technology. You can take that video cast and you can just drag the slider at the thing and move up and catch the limited commentary that's there. But I constantly kept on saying that if things move up the pivot, as long as the stochastics are moving higher, especially the slow stows, which are not overbought yet, and they got overbought end of the day, not severe, but up there. So when a trader comes to me, and remember, I'm a coach. I'm not here to sympathize with you because that's not my job. My job is to basically try to teach what the reality of the business is. Look, to me, this is my living. To some of you, this is a joke. Some of you, you want to make $100, that's fine because you got income coming from somewhere else. I don't. I'm not on welfare. I don't get a pension check. I don't get a 9/11 survivor check, which I am a 9/11 survivor because I refused to get it because I thought that was wrong. And a lot of people that I know fraudulently still get 9/11 survivor checks because they were within the vicinity of 5 miles of ground zero. People cheat. I'm a straight up guy. I don't do that stuff. So this is my living. This is what I have to feed my family with, pay my kids college tuition, repay loans, and every day pay my bills and keep a great standard of living. So everyone has their different priorities. To some people, trading say, oh, well, it's just another little supplemental little income coming here and there. That's fine and good. My passion comes from the fact that I love what I do and the need of what I need to do. So saying all that, when I hear excuses, and I hear them a lot, because we are all full of excuses. Let's face facts here. I make excuses to myself too. But some of you make excuses which are so banal I can't even tell you. And don't take it offensively, okay? Have a thick skin because this is a trading floor that we're talking in. All right? This is not like some soft little tea party. I mean, the little, what do you call, Tupperware party going on. This is the trading floor. That's how we talk. So please stop getting offended when I talk like this. You don't like it? Click off and go. But my point is, I'm sick and tired of hearing excuses. Oh, well, and then some people text me on the side and this and that. And I'm going to limit these side texts that I have to give. I can't physically handle it. Trying to nurture every little person and some people babysit them. And grow up time, all right? These are aggressive, dangerous markets where we're still making a very decent sum of money. Go through some other service, you know, they're just giving you a little sweeper info and blah, 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 blah. Are they walking you through the way I'm walking you through this jungle called volatility? No, they're not. I know that. So let me to say all that. I'm not pissed off, but I got to really lay it down. You guys need to really wake up and look at these charts and try to understand what the heck's going on. Many of you have signed up for the ACS, and you guys are getting it. I'll even pick up Will for a minute. I'm so frigging impressed with that kid. You know, he resisted joining the ACS. He finally did. And within one day, he saw things that he couldn't believe he was seeing and understanding them to a certain degree. And then we have other people who have been with us and have been busy and stuff, like Always Learning, who are starting to see it. And the only way you start to see it, let's face facts, is when you actually make some money. I could talk a game, like I've talked so much, not even funny, right? And explained so much. But if that doesn't translate into money in your pockets, another person I'm going to highlight is House. Okay? Another new member. He starts to just try to focus a little bit and stop thinking idiotically. What did I say last night? Ignorant is not bliss, especially in trading. Maybe in politics it is. But in trading, it's not. You got to be smart. You don't have to be a rocket scientist smart. I'm not. But you need to focus a little bit, a lot more than you're doing right now, and stop giving yourself. Forget about me, because I'm not your mommy or daddy. Okay, I ain't paying your bills. Stop making excuses to yourself. That's called behavioral game theory. The worst thing you could ever do to yourself, and a quick success to real failure, is making excuses when you're not performing at peak performance. Now, I do agree, not everyone's into peak performance. Some people get a little bit, they're happy, they're like, okay, great, I did it, I'm fine, I'm walking away. That's fine. But people who are into peak performance, who want to maximize their potential on what they want to make every single day, every single week, on overall what they want to, how they want to succeed in trading and in investing, they're pretty much the same, believe me. Okay, trading's more dynamic. Trading's like skiing, extreme skiing in the slopes of Vermont. Okay, and especially in these type of markets. Well, those people need to really push themselves. You're looking at charts, you're looking at things, it's telling you the pivots captured, you're moving past the moving averages, the stochastics are moving. I'm constantly putting stuff out there, and then I still hear so many people they just sat back. Oh, well, you know, I did a little bit, so I'm sitting back. Fine, that's good. You know, I don't have anything to say. But then the minute the market goes down a bit, they're like, oh, you know. So, look, I'm an adult, okay? This is my 5th decade of my existence in life, and I have more energy than a 20-year-old out there. Because I believe in life. I believe in where we live in this great nation. But some of you got to get some of the energy, please. All right? So that's the behavioral game theory aspect part. I am getting really tired of pushing people to look at my phenomenal charts. Not always right to the exact time, but very right 90% of the time, I would say. And really think a little harder. What are you doing? So saying all that, I put a lot of charts out there today, okay? Did we know we were going to have this complete V-shaped pattern? No. It developed over hours. It developed as it hit the pivot, slipped. Lael Brainerd spoke. This morning, Lockhart, another Fed governor, spoke. But things were developing very well off the levels here. Things were developing, very well on the algo HFT charts. Just had to scalp along the way. But to sit when we cross over this big pivot level and you're seeing this accelerate, and to not take a small position as we get towards the end of the day just doesn't make any sense to me. So let's look at another chart here, which is extremely important to understand. And these are pretty much at the end of the day. And why isn't it coming up? Okay. So I'm going to ask people a question and just step up and answer. Seriously. Look, I'm not a dominatrix, okay? I'm not going to whip you into like the 50 Shades of Grey. By the way, I've never seen that movie anyway. And I'm neither am I into bondage, all right? The only bondage I'm in is I'm a trader. I'm bonded to trading. How about that? So, but I just want to see what people see. Now, these dots here where I put the pivot on the Thinkorswim platform, and many of you who use that, which reminds me, a very important question that I need to ask everyone one by one and do answer. Always learning. What platform do you use? Does any of your platform that you use for charting match one of the ones that I'm using for my charts?
Yeah, I use Thinkorswim.
Okay, let's move on. Fantastic. Charles. And is this Charles who? Charles.
He's on mute.
Charles, can you hear me? Looks like he's sitting in a cave there. Charles, can you hear me? I think I know who it is. Corey. So any of the...
I use Thinkorswim and investing.com.
Fantastic. Lamont.
TOS.
Okay, thank you. Lizzie?
I use free stock charts and Fidelity and investing.com.
Okay. Okay. Try to open up a basic account on Thinkorswim so you at least have access to the platform. I can't even tell you there's you just need, did you say you use TradeStation or not?
Me, no. I use Fidelity as far as where the account is held, and I use freestocks.com.
Yeah, but freestocks.
Yeah, investing.com.
Okay, investing.com is actually a little bit more dynamic. Freestocks.com is not really dynamic. Highly recommended for your own good. Get Thinkorswim, and then at some point when you're very comfortable, when you're up there, get the quad platform. Get Thinkorswim. You can open an account for $100. I keep on telling people all this time. For 2+ years, I used Thinkorswim, and I only had $100 left in that account. I never traded on that platform. Okay, only for charting, because you gotta see what's happening in front, and when you can see what I see, it's almost a 100% probability that you're going to do better in managing your trades. No questions asked. So just do that. Shawnee.
Pass.
Excellent. Vikas.
Thinkorswim, investing, and TC2000.
Okay, very good. And Will, you just got TOS, correct?
Yes. I got a free trial on there, actually.
That's fine.
60-day free trial.
Fine. And you can open up an account with $100 and just get the full thing.
Yep.
So, like I said, forget the free trial stuff. It's not like they're charging you by the month. You know what I'm saying? Just open an account there. Yeah, exactly. Because that 60 days means nothing. You got to have it with you as a tool. Because my biggest thing is what I've learned in these years of this business is that if you don't have the right weapons, you're going to never win the battle. I don't care how smart somebody.
After that 60 days, I plan on getting a full account.
Yeah, or if you really want to be smart, this is what smart people do. Don't wait the 60 days. Just give them $100 and open an account. So you have full access to everything, because the free trial might not have all the features that a real subscriber, a client of the Thinkorswim might have. So why wait 60 days? It doesn't matter, because in 60 days you could make a crap load of money by being completely using Thinkorswim, which you will be anyway, than waiting around for it. So think a little bit ahead, have a little bit more farsightedness than just thinking the 60-day stuff. Okay, so saying all that, when you look at this chart here on Thinkorswim, what's the first thing that like screams back at you? And anyone step up and answer.
The large green candle.
Correct.
Candle.
It's a massive, massive candle that has encompassed, and from a more advanced level, we hit the levels we talked about before, which was the 2100 level on the this is obviously the E-minis, but even on the SPX, we actually went to like 2100 and change pre-market, right? So pre-market, we actually dipped, and then there was a reversal candle, which looks like a massive hammer reversal with a massive head here, which looks like a firecracker right up the bear's you know what. Seriously, that's what it looks like, okay? And it's very dangerous. If I was short right now, I would be really, really, really scared, even though we haven't punctured through the, what time was this put out there? 50. Okay, we really haven't punctured through the full, or did we? Let me see. Yeah, we haven't punctured through this big downtrend line that's awaiting us. This is like a big wall. Okay, so this is the live version, obviously. Now, what's the other thing that screams out at people? Because I realize one thing. I'm spending a lot of time teaching people a lot of stuff. Many, just like everything else in life, and no one should take it the wrong way. Some are faster learners than others, just the way it is. You know, some can do things better, and not everyone has to be on the equal learning thing. You know, that's that's the whole essence of capitalism, right? Some people are faster learners, some people are a little slower learners, but then they catch up fast. So that's the reason why I'm asking these questions, because I want to see through your eyes what you guys are seeing. And on this chart, and don't get too technical, what's the second thing that screams out at you?
Volume.
Okay, the Vikas said volume. And always learning? Somebody's getting a lot of feedback. Sounds like a bad version of Exorcist. So please, what do you call? Wow, there's the devil there. All right, listen. Charles, you going to speak up or no? Charles, please identify yourself, or else you're out of this session.
Yeah, this Charles.
Is it Charles Bailey?
Yeah, this Charles Bailey.
I'll talk to you later, Charles. Stay in the session. Okay, so all right. So what's the? I'm going to ask. So always learning. What did you say? What's the thing that stares at you? I mean, big time, like screaming at you on this chart. Aside from this big candle that Shani mentioned.
The McClellan oscillator.
No, that's not screaming at you.
The volume candle.
Everyone, please mute the microphones, please.
Not a big one.
Everyone, please mute the microphones before I do it for them. Okay, so always learning. What's the other thing that you look at which is screaming at you on this chart? In conjunction. One second. I asked always learning. Please, one person at a time. Go ahead.
Okay. Well, I see the large volume candle.
That's it. That's it. You don't have to go any further. Exactly, the large volume candle. Charles, what sticks out and screams at you aside from this very large reversal, fat candle reversal, which is obviously worth noting after the big drop? What's the other thing that screams out at you?
Descending triangle, huh?
Okay, well, it's not a descending triangle to start with, so it doesn't matter. It's the volume. All right, Corey.
So you said the big fat candle. You got the volume that's sitting there. Maybe the Darvas box where it bounced off the bottom of it.
Yeah, they're absolutely correct. But you're right. It's the volume. I'm talking visually. If I show this chart to a person who has never seen a chart in their life, they're going to say, wow, nice colors. And they're going to say, wow, look at that green candle. So what I'm getting at, and I'm not going to go further with this, is that you always have to sometimes just go with the obvious, the simplicity of a chart. The simplicity of a chart, it's a structure. You don't have to really get deep into this stuff. Sometimes I say, keep it simple. Well, let's keep it simple. This is the thing that really strikes out, okay? This was Friday. This was Friday, 9/9, right? I mean, it was just humongous. That was like capitulation volume, 2.8 million contracts of drop straight down. And I want to get into reasons and stuff. We talked about it in the advanced ACS sessions. I bet you that there were some funds that blew up because they were way too leveraged on the bond side when bond prices just collapsed and bond yields just rose very sharply. They just couldn't handle the pressure because you don't get a 400-point drop every single minute straight down like this unless something went very wrong. And my point is, this was the volume, and look at the volume today. Look at it very simply. The short covering volume, the buy volume, whatever you call it, was much, much larger than what it was on Friday. So that itself is a positive sign. And then you can look at the Darvas. It bounced off the bottom of the Darvas, and at the upper end of the Darvas is 2190, 2189 on the SO. That stuff is already there. So that's the first thing that you look at. Now, let's move on to the next chart. Now, this one, it's you just have to sort of just focus. This one requires a little bit more focus. If you notice, I touched the bottom. I touched every line is drawn for a justifiable reason. There, 3 points of contact, and right there. Is it a coincidence that the market bounced off exactly off this uptrend line? I don't expect everyone to draw lines like that, but you know what? I do, and a lot of the times, in fact, a majority of the times, they work, and that's the only reason why I really started to believe in my charts. I didn't believe in my charts years ago. What do you think? I woke up one morning and said, oh, I'm a genius. I'm going to just know how to chart everything. No, I didn't. It came out of really hard work and practice, which still continues to this day. But I joined this line of two major inflection bottoms, okay? And then all of a sudden I realized it joins the third one. I said, that's good. It even joined the fourth one right there. And this is off investing.com. And guess what happened? Well, that's exactly what we touched today. I call it rate exit, right? CNBC should pick that up. Rate exit. There's Brexit, there's rate exit. There should be a clue exit, you know, who knows. And then I drew this line here from actually this should have been touching here. Whatever the case, you know, if I tweaked that and drawn it correctly for some reason, you know, it would have touched here. It's funny how markets are so asymmetrically mathematically correct. The problem is that as human traders, we are mathematically completely incorrect all the time because we are always emotional. We are. I have met very few traders, and I can identify very few in our great group of Clueless Day trading members who are very methodical and robotic, but I am starting to see who they are. And my hat's off to them because they're forcing themselves to really rely on tactical, technical charting rather than their brains. Unfortunately, the bad news is that some and a good portion of Clueless Day trading members are still so emotionally defunct. And they're good people and smart people. But they are so emotionally scarred from whatever that they number one, refuse to, and number two, fail to comprehend the power of mathematical correlations on the market. Now, is that, I don't want to sound like the too fancy English. Let's keep it real simple. They gotta force, many of you have to force yourself to stop being so frigging emotional and give yourself excuses that you're okay with a 20% gain when you could have made 200%. Now that, again, I repeat, everyone has their own allotment of what they want to make. So it's okay. I'm not pushing you to be an extreme skier, an extreme trader. But in markets which are extreme, you need to make more, because what you didn't make or left a lot on the table is a loss to you. If you don't understand that concept, then you're not going to survive these type of volatility-driven algo HFT markets, and I can guarantee you that part at least. You have to think, you cannot just say, I made a little and I'm not going to make more. I'm just going to wait around. Now, we don't know what's going to happen in the markets on a minute-by-minute basis. We agree with that. That's the reason why we rely on the probabilities of all these different things that I'm showing. That's why I'm going through each one of these charts one by one to explain to people and not make excuses. I make excuses too. But I'm sick of myself when I make excuses. So why shouldn't you guys be sick of yourself for making excuses? I'm serious. Because the biggest deficiencies that traders have from a behavioral standpoint, because believe me, trading is truly, you know, that old cliche 90% mental. Well, now it's not just 90% mental, it's 90% mental and tactical, which makes it doubly difficult. But the biggest deficiency of traders are, and I know people, you don't want to hear that, you're grown men and women, you're like, why is this guy preaching to us? Well, I don't care, because this is my service and I'm trying to help you guys. Honestly, I don't care. Because I do, but in a way I do care. That's why I'm spending this time instead of sitting out on my lovely balcony looking out on the water. Or going on a 2-hour long walk with my dogs instead of rushing back to do the session. Or going out to dinner with my lovely wife and my kid. Well, my kid doesn't go to dinner. He does his college work. So my point is, so respect it. So that the biggest deficiency, I will say, and I know that personally, is we don't admit our faults. If we admit our faults, then we will be better in life and in trading. That's all I gotta say. You want to keep on denying that, you'll be a lousy trader, guaranteed. I don't care what services you join. So saying all that, let's take a look at Netflix here, other chart that I drew. Now these are complex charts. Not that hard, but they're complex, but they're patterns that one has to identify. You've got a very powerful reversal bar here, which basically shows you, and people who are starting to understand patterns, that you have a defined head, inverse head and shoulder, left shoulder, left shoulder, a kind of a rolling upside bias right shoulder, kind of skewed, right? Like you're moving sideways. You see a lot of people in New York, like, you know, kind of walking sideways with their right shoulder up. I'm just kidding, but seriously. And that is looking like we're going to break out of this downtrend line, this red dotted line. And if we do that, then we have resistance here. This is a pure algo chart. These resistances, the green lines, the yellow line, the red lines, they're not put by me. They're computer generated. Just like your platforms, you just put pivots and, you know, they'll be generating the same levels. So it looks likely that we can go to 101, 102. The stochastics here are not telling me anything other than they remain above 80, which is a good sign. The longer something stays overbought while they are kind of consolidating, moving higher, because nothing here in this chart really shows a breakdown. It didn't even show a breakdown on Friday either. I said that. And but the longer something stays in the overbought level, that means there's strength behind it, as long as the charts are, you know, kind of cooperating with it. So again, I take a naked chart and I dress it up with all these fancy, very powerful tactical lines. Do what you need to do. Let's move on to the next chart. This is the same one, the SPY, and the same powerful move here. Now, if somebody was long at these levels, okay, bought the first candle, I know some of you did, probably sold along the way here, which is absolutely fine, because remember, we don't know at the beginning of the day despite 1, 2, 3 candles, whether or not we are going to have a phenomenal V-shaped move. We all agree on that, right? We don't know that because along the way, it zigzags, turns red, and then by the end of the day, in hindsight, we're like, wow, look at that. Well, what the way I do from a strategy standpoint, I'll buy in the money at this point, SPXs. It's few. Because we could have easily slipped and created, and I mentioned this earlier, we could have created a double bottom going further down after we moved up here. Could have easily come like this. It could have done this. Could have done this. Possibly slipped to the lower Bollinger and then moved higher. Over time, these things will come naturally to you. So all the possibilities are there. We're not writing it off. But if you bought something here and you got yourself a nice 40% gain here, you take it and then you roll out the strike further. If you bought the 212s, then you buy the 213s. Take profits, roll out the strike further. You don't know what's going to happen at the pivot because the pivot's a very, very powerful resistance. Just the way it was support that just gave in, at this point it becomes resistance. But once over the pivot, write this down somewhere in your head, on paper, wherever. Machines work off pivots as one of their main parameters of movement. Okay? And once you cross over the pivot, you use that as a springboard to move higher or hit the wall and the pivot, move lower. Does everyone understand that part?
Yes.
Okay, just remember that. And nowadays with this type of volatility, pivots are becoming critical. And that's why I mentioned it so many times today. Now it's a chart, whether it's a stock chart or an index chart does not matter. If you go over the pivot and hold that, you are going to go higher in the short term. If you go below the pivot, chances are, if you don't bounce back, you're going to go lower. And that's exactly what happened here. Of course, we keep on track of the internals. Internals are overbought. So we don't know whether this all of a sudden is going to turn down. Well, that's something, one has to watch on their own screens. That's why you have computer monitors. It's not like you're sitting there in the middle of the Sahara Desert, with no computers and saying, okay, you're reading clueless day trading signals from the sky. You know what I'm saying? You got your computers, and you got to look at it and decide. But don't freak out too much. As long as the internals are pushing that, and of course the comments and stuff that I make. Because the minute I see any type of really dangerous candle, I'm there to help. I always put it out there. Sometimes I'm wrong. Sometimes I've seen candles that developed into a big fat candle for about 10, 15 minutes, then they turn around and blast me out if I bought any puts. It's happened, right? We agree?
Yes.
Yep, it's happened in certain days because powerful markets do that. Now, this was a beautiful chart here on Friday. And it's like blink. Okay, I want you all to do this. Blink. Wow, is that the same chart? Blink. All right? Okay, I'm kidding, but seriously, this caught my eye because it's just like, here we are going straight down here, which we did, by the way. Pre-market, we went here. Okay, pre-market, we did go here. And we came close, we came exactly here, pre-market, just so you know that. Remember, a lot of the action happens pre-market or after market, so it doesn't have to be during the market. We did come and test 2106 pre-market. Closed this big fat gap, and then we bounced. Bounced around, and now we are, what did we close at? 2159. We closed right here, which also happens to be the last level of support that we broke on Friday. So, and we just went like this. Look at that. Look at that. I just drew this without even knowing it. Okay, this was what I drew, right? Everyone focus. Look, right there. Magic. Now it's why I'm doing this stuff is I want you guys to really see that these things happen all the time. Focus again. If any of you have young kids, they'll like this one. You know, just take this chart and go like this. Like, you want to see this? Boom. And they'll say, Daddy, Mommy, I knew this was going to happen. All right? Try it on kids younger than 9. There you go. All right. So now we're approaching the 50, 30, and the 34 and the 50-day moving averages. And that's what I kept on saying was going to be the next level of retest. And who knows? I don't know. Maybe the market's strong enough to blast through it like it did during Brexit and go far higher than me and you can ever imagine. It looks like it. Now, before I go to the next chart, I want to explain one thing very simple to everyone. If you think, first of all, the average person who is not involved in double speak. Everyone understand the word double speak, right?
Yes.
Yes, we all double speak. We all do, whether we realize it or not. Inherently, human beings are liars. I know no one wants to hear that, but inherently human beings are liars. We lie to ourselves, we lie to other people. And the reason why human beings are genetically liars and not disposed to telling the good, honest truth for 2 reasons. One, genetically speaking, we are always trying to protect ourselves. And think what I'm saying. And number 2, genetically, we lie to protect ourselves and our families. And number 3, we don't want to offend somebody else. Now think again what I just said. Every person you meet, even a person you don't really give a crap about, yes, hey, how you doing? Yes? That's what you say, right? Yes? No? Maybe?
I agree 100%.
Okay? And we say, hey, how you doing? You know? We don't believe that for a single minute. Somebody please mute the microphone. We don't believe that for a single minute. We're just bullshitting. It's double speak. All right? Hey, how you doing? How's your day going? Do we give a shit how their day is going? Absolutely not. And that even implies to people we actually like. We don't give a crap how their day is going if our day is going bad. It's our self-interest that we work on. That also happens to be, read Ayn Rand, called capitalism. It's selfish. Fine. That's how human beings went from being apes or whatever, you know, with the evolutionary theory to becoming, you know, modern man. Doesn't matter what evolutionary theory you believe in or other people believe in, that's fine. So saying all that, the reason I'm mentioning that is not to give you a lecture on human genetics and behavioral thing, but it directly ties in with what you hear on the news. You hear Lael Brainerd speak, you hear Rosengren speak, you hear Lockhart speak, you hear Trump speak, you hear Clinton speak, you hear blah, 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 blah speak, and you think you know what they're saying. You have absolutely no idea what the heck they're saying, because what they are saying is double speak, all of them. Nobody is straightforward truthful. And is that bad? No, it's life. So get with it. So when I hear this Fed speaker saying this and that, oh, Fed speaker said this and that, you know what? On Friday, something else happened. And I mentioned that on the ACS advanced coaching session, which propagated the selling to the level that it did. It wasn't just Rosengren. It wasn't just North Korea. It had a lot to do with some severe overbought conditions in the market. It had a lot to do with bond deals rising very quickly, very fast, because some hedge funds were blowing up. And that propagated, and then the media looked for reasons why we sold off. And today they're grasping for reasons why we went up. So it's all doublespeak. Just remember that. Let's face reality. So don't try to super analyze what these Fed guys were saying, and don't get too politically dogmatic of what they're trying to do, because that will be the end of your trading book. Guaranteed. Let's move on. Video. Listen to it when you have a minute. Like I say, you don't have to sit there and listen to that, because I leave it on and then come in with some quick commentary. Just fast forward it and look at what I'm trying to say. I draw all kinds of what do you call, crayon things showing things. I mean, these are hugely helpful. I wish somebody did this to me when I was learning my trading skills. All I did was pay big money to get newsletters and stuff, far more than what you guys are all paying me a month, okay, to get one newsletter at the end of the night at 8 p.m. But I learned from them. No one's interacting with their members as much as we are here at Clueless A Trading. So this is the same thing. This is the RUT. I call, here's Brexit. Here's bond exit, rate exit. I'm making up a lot of fun, funky names. But both look very similar, at least from a pattern standpoint. Only thing missing is we didn't get the second leg of this move down, but we did get a second leg of the move down early in the morning. Whichever the case, this uptrend line better hold. And this is the TF. This is the Russell 2000 futures. You have to monitor it if you're playing the IWM or RUT. This looks damn good. This is a daily. Look at that. V-shaped move here. Not bad. Maybe it comes down a little bit. Maybe we pull back a little bit, which will most probably might happen tomorrow morning. Futures are down about 3.5 points. We'll go from there. As long as we don't break this line heavy, we're going to be fine. And as long as this doesn't completely turn around back into going towards zero, we're fine. And this better keep on shrinking. This is the McLaren oscillator. So those are the main things you got to start reading. Another great video cast. Real-time soap opera. I'm putting it out there. Now, here's a chart of the SPX. And remember, while I'm showing this stuff, I just want to mention a couple of quick things. The cleanest way you can play the market, I mean the cleanest way, is to play the SPX, the RUT, IWM SPICE, or QQQ, whatever you want to play, indexes. Okay? That's the cleanest way of doing it for a simple reason. Can somebody tell me what the simple reason is?
You don't have biases of the individual stocks, so someone's sitting there, analyst sitting there trying to crush it.
Correct. Analysts sitting there to crush it or move it against you if you're short, which happened to me on Tesla a few times. I don't like it. So, and the other reason is, can somebody tell me the second reason? Corey, tell me the first reason. It's a simple.
I believe they basically pay the best.
Nah, not true.
Are the indices because they are the market?
You guys are getting close to it. I mean, what do they always do? What do the index options, calls or puts always do? I mean, or the indices always do? Aside from a stock which can just sit there like a fat cat and do nothing sometimes after being up, like Tesla, fantastic move, great profits, and then it just sat there all day.
Maintain their stock ratio.
Now you're getting too heavy-duty intellectual for me. Very simple. They always move up or down. Get it?
Okay.
That's the answer. Indices always move up or down. They'll move up 5 points, they'll move down 6 points, they'll move up 3 points. They're always moving. Stocks, even on a good day, you notice a lot of stocks, which is normal, and traders scratch their heads and go, man, why isn't it moving? Stock market's up like flying. SPXs are flying, or RUTs are flying, and then wondering, why is the stock just sitting there? Stocks do that because stocks are being bought and sold by certain funds, hedge funds, institutional guys. So if they're not heavy into it, me and you are not going to be able to move it, correct? So that's the reason. SPXs, IWMs, and stuff are the cleanest things because they're always mobile. They're always moving up or down. So you can actually trade them all day long, just the way futures traders do. You get it? So they're actually, in these type of circumstances, some of the cleanest ways to move the market, and they're easier to read. The levels are more defined. So here's an SPX level. This was exciting to see. I didn't expect that, to be honest with you, that we actually went above the pivot nicely on the SPX. And looking at my other screen, just to get an idea of where we landed up, we actually ended up real nice. We were by the end of the day, we were almost kissing the 50 moving average. Now, here's the 5-point question I want somebody to answer. I don't know what some of you will step up and answer that. Despite all the major 400-point crash and this reversal that's taking place and the world is ending scenario, you know, you couldn't even turn on StockTwits or CNBC because they're all like, oh my God, this is it. This is the big one, the end of the story. You know, the Federal Reserve is a bunch of whatever. They don't know what they're doing. And, you know, all that crap. What never changed from a technical standpoint? I mentioned this in the ACS yesterday, so I want to know who actually was listening. There's a difference between hearing and listening, right? I said it many times. A key component feature of a technical chart, if it doesn't change, then that primary trend remains intact. In the case of the market, the primary trend is still higher for now. So what didn't change? I'll play
The
around.
uptrend still stayed in place, right? The uptrend
Okay.
chart stayed in. We didn't go below the uptrend.
You answered the obvious, but what technically didn't change? I'm throwing around my platinum dice as I'm waiting for some answers. You gave the answer, but you gave me a broad answer, which is an obvious answer. But what technically, let me put it this way, what indicator didn't change despite this massive volatility that we incurred on Friday that looked like the end of the world? And somebody better mute the microphone. Please, I don't have all day. Vic?
The tactical charts didn't change.
What didn't change?
Yeah, I'm here. What was the question? Sorry.
Okay, here's the question. Okay, let me make this simple. This is how you really stay in the game. All right. When you look at the chart, and I know this is just one chart of the S&P. Despite the massive red candle, despite the indicators, I mean, the stochastics falling apart, and this stochastic, by the way, still hasn't fully turned. I'll be honest with you. Okay. By the end of the day, the stows on the slow stows were just. Sorry, 1 second. I'll draw it out for you. Hold on. I'm looking at my other screen. The slow stows were just like this by the end of the day. So it's not like a real confirmation that we're going ahead. But what was it in this chart? And I talked about this extensively last night. So please, that's what I'm saying. Lack of focus is not going to get you guys anywhere. What didn't change despite this massive volatility that we incurred in the market?
I remember now, the 34 and the 50
yes.
Moving average didn't change.
There you go. Thank you, Corey. And I appreciate you saying that. Guys, wake up, okay? I mentioned this several times. It's not rocket science. This was Brexit, a 950 to 1,000 point drop up top to bottom, or 930, whatever the case, almost 1,000 point drop. Look at the moving averages. I talked about this extensively last night and in every single session that I teach. The moving averages stayed flat. Big move here. Moving averages are completely fine. You can see it. Here's your the actual chart is on my other screen, but here's your 34, here's your 50, nothing changed. Go try telling that to some of the bozos on StockTwits and all the other trading groups you guys might follow. They'll probably think you're a nut. They're like, everything changed. Nothing changed. Technically, nothing changed yet. Put it again. Look at the 50, the red line. Look at this orange line, which is the 34, the same standard colors that I use. It didn't change. And this is a daily chart. Yes, they changed on the hourly. On the hourly, they went like this. But on the daily, nothing changed. Nothing changed on the weekly. So any doomsday sayers saying this is the beginning of the world, maybe they know something I don't know. Maybe they will change. Maybe we'll get a couple of other 500-point drops, and then they will change. Now, this is another chart that I drew. This now, the reason why it's dotted like this is because I was recording the real-time video for all your benefits, so you can see how these candles move intraday. I know they're a little bit boring to watch if you're like, but you can always fast forward and see what happened. So here was Brexit. Here was bond exit, right? That's what I called Friday's thing. And look how similar that looks. This is the key. If this continues higher, ladies and gentlemen, please don't bother me where we're going with the market. I've said this a zillion times. I'm saying it again. If this continues higher, stay with the trade. Doesn't mean you can't take profits. Definitely take profits. Why does taking profits on a staggered basis, what does it do for us? Can somebody answer me the simple question? And give me a human answer, not like some sort of like manufactured answer from a script.
Basically, your risk you're taking off the table. You're making money and you're taking the risk, reducing the risk.
You're reducing the risk, and what is it doing for you as a person?
Your bank account is growing.
Thank you. It's making you feel good, right? It's making you feel good. That's exactly what trading is all about. Confidence. The first leg of that 40% move, take it. And yes, it moves another 40%. Well, you can always scale. You can always scale in or take a good portion of that down because you just took some numerical numbers, shining green on your screen, into real hard money that you can spend on yourself, your family, pay back your loans, your bills, do the right thing. Yes or no?
Absolutely.
That's it. Build your confidence. Then the next trade will be confidence is contagious. Misery loves company. Don't forget that.
Hey, Clue, let me add one thing if I may. You
Go
know
ahead.
the one that gave me the most confidence today of the chart that said 1,000 words was that one that you had on investing.com, and you said that candle, once it touched the bottom of that Bollinger Band, it was going to take off.
Okay.
And you were so right.
Okay. Now, this one of these type of charts, right?
Yep. Yeah, that's when you wrote.
Okay. So this is what I wrote specifically. You're correct, but let me expand on it a little bit more. Anytime, ladies and gentlemen, anytime you see, especially on the daily, this is a daily for God's sake, so it carries more weight, right? This is a daily. When you blow out of the Bollinger Bands on the upside or the downside, in this case the downside, like we did during Brexit, we fell out of the Bollinger Bands like a baby thrown out with what? The bathtub, throw the nanny out with it too, add the pets too, like throw everybody out. That's what happens. So when that's called capitulation type of move. Now this was this was 6 hours ago. This was like 1 o'clock or something. This is actually far higher right now. So we are at 2159. So we actually closed up here somewhere. Okay. And so the candle expanded up here. My thing is very simple. It's hard to tell, right, when it's happening, but any single time, there is almost a 90% probability, ladies and gentlemen, that when you break below the lower Bollinger or overshoot out of a upper Bollinger during that euphoria, this is complete despair. Okay, capitulation, exhaustion top. Remember, capitulation, exhaustion top. Exhaustion top, like just goes, all right? So anytime you come out of it, if you completely blow out of the Bollinger, you will get back into the Bollinger. Now, at exactly what time that's going to happen, whether it's the same day or the day after, I can't really tell you unless you're monitoring the internals. Is everyone clear about that? So that is exactly what Corey just said. You blow out of the Bollinger, you buy. You hold your nose and you buy. You know what it's like in real life? Anyone ever done cliff diving? Yes, no, maybe? Yes?
No desire.
Okay, does anyone really taken a dive off on a pool with like a 30-foot high like spray, diving board?
Yes.
Okay. Anyone ever, drove off a cliff into a lagoon or something and then just, yes, no?
Yes.
Okay, other than Corey, has anyone done that? I'm sure you have. Lizzie has.
Yeah.
Okay, you know what I'm talking about. Okay, so trading follows the laws of nature. I've realized that over the years. Okay, so every action has an equal and opposite reaction. A body at rest remains in rest. A body in motion stays in motion. Okay, so all kinds of stuff. Now, if you cliff dive under the water, let's say this is the water, you generally, unless a shark eats you or a crab holds you down, you actually bounce up back above the water. It's the same concept of the Bollinger Bands. Okay, it's a coil spring effect. So here's your cliff, here's your dive. It's a laws of momentum. Then the pressure of that dive will basically spring you up. That's the same thing that happens here. Now, how far you go up and how far, whether or not you go towards the top, we have no idea. That's obviously, takes more complex readings. So that's the theory behind the overshoot of the Bollingers. Here's Lael Brainerd, who talked about, the rate hikes and big dovish. This is an excellent chart that I put out there. I've been using pivots for the first time, believe it or not. I actually used it a while ago. I started using it on actual Thinkorswim charts. And very interesting. They're dots. I have no idea why. Then it should be lines. But anyway, the yellow is always the pivot. Here's your red, which is your support. Here's your green. And this was so symmetrically, mathematically symmetrical. I was like, I was taken back a bit. Same amount of candles, same stuff. So that's telling me that the machines basically did a number on a bunch of funds, and then they now they're buying it back. Priceline up 21, Amazon up 11, Tesla up 4.5, Netflix up 2.5. Apple should go to 110 because Samsung's toast. In fact, real toast. You want to make a toast? Put a toast on a Samsung Galaxy or whatever the crap the phones are, okay? And then turn the phone on. You'll get nice toast. That's what they're telling us. In fact, they told the FTC to tell all consumers. That's heavy. Imagine if something happened that to Apple. We would be down like $20 on that thing. Like crazy. That's like the harshest warning ever. Like, hi, mommy, and the next thing you know, you're burning, your ear's burning. I mean, what the hell's going on? Something is dramatically wrong with those phones. I know I piss on Samsung, and I never like Samsung phone, even though they're great phones, mind you. But the point is that, and it's not a Korean thing either. Because I love Korean food. So the point is that the point is, all kidding aside, that's a dangerous warning. Like, don't use the phone. Put it down. Don't don't call dad because it might blow up in your face. I mean, come on. I mean, you know how many people are not buying Samsung phones right now? Regardless of how much they like the Galaxy and the stylus and all that stuff, they're not even touching a Samsung phone because it's a great toaster, but not a cell phone. End of story. Apple should go up a lot more just based on that psychological reason. And plus the iPhone 7, I think, is going to be humongous. One very important thing. Apple iPhone 7, they're not releasing numbers anymore. You know that, right? But if you do the quick fact check and go to the stores or call them up, they're all pretty much getting sold out big time. I went on Friday, and because I got an upgrade, so I'm upgrading up to the iPhone 7, and they're moving fast. They're moving fast. Here's another table that I posted. I'll be posting more of these as we go forward, showing open interest volume, today's volume versus open interest. Open interest 1,700 calls on the SPX 14 Wednesday expiry. 6,000 volume. Come on. Okay, and the same thing here. 200 open interest from Friday, right? That's a 9-to-1. More than that. That's almost a 10-to-1. That's pretty big.
Hey, Clue, when does the volume roll into the open interest? Is it a day lag or what?
Oh, day lag. Yes. So tomorrow you'll see the open interest as tomorrow you'll see the open interest. You should see the open interest at 6,000 plus. Correct. I mean, not 6,000 plus, 6,000 plus 1,700. Exactly. Good point. We'll monitor that tomorrow. Yes, it's a day. It's not immediate. It's a day. The next day they adjusted. All right. So this is again for people who are real options geeks, which I'm not. I use that as a play. But people who are really very, very good at option spreads and stuff, they're always watching this stuff big time. That's why you get those sweepers and good information that you guys put on the site, and I appreciate that. Okay. So this is investing.com charts. This is what was going on at the time we were below the pivot. Okay. Now what kept me in the game? I didn't actually buy that much at these levels. I had some small ones, but I didn't feel like posting because I wasn't sure what was going to go on. So if you notice, the first part of the day till we got to the pivot, I did not say buy the SPX calls. Yes, I didn't. So because I don't want to basically in a heavy volatile market, a move up like this means nothing to me unless we cross the pivot level. The same thing applies with stocks. Does everyone follow me on that? So I could lead people into a trade. They would be up 30, 40%. I could do that a little bit on my own, okay? But to lead people into it and see a big failure somewhere here before it even comes to the pivot, I don't feel like, in this type of volatile market, I got to use some semblance of responsibility, even though I have none for you guys because I'm not responsible for what you guys do. But I didn't do that. But once it crossed the pivot or came close to it, once this was confirmed on a move up, once this was confirming a move up, if you recall, that's when I said buy the SPX calls. And right after that, the market exploded. Yes or no? Even though the market was exploding from here, but right after that, the real bang push came. The pivot is king. You can put it on your screens, on your platforms, and monitor it. You'll see what magic it does. Then we have this here, which we already talked about. Let me pick up a stock chart. So here, Tesla. This was right the breakout. This stock is destined for 205. Just technically speaking, I mean that's a big W formation. I don't have anything else to say. Okay. It's going to go like this. Now, whether or not it goes to 212, I have no idea. But Tesla's, it's a volatile stock, but at least the technicals are shaping up to be fantastic. I said that on Friday. The last move that we saw in Tesla at the end of the day where it systematically sold off was only because the markets were selling everything systematically when we dropped from 3 to 400 within half an hour. So that really has no bearing. So this one on a tactical basis is a good trade, and it turned out to be a good trade. Here's another simple chart that I drew. That's if I always look up here and what's highlighted, it's a 1 hour, got overbought, didn't matter, market still went higher. So saying all that, what I'm getting at is, here's the Apple chart that I drew. Nav is a great member. He's asking me, do you think that I was wrong on Apple? Because he was like giving me a long past history of Apple. I said, yes, I think you're wrong. What's a big deal about it? Because we're talking about what's happening now, not what happened before. A trader cannot think with baggage on their head all the time. Oh yeah, Apple dropped right after the thing. Well, it was a big manipulated drop for whatever reason. Maybe some funds knew that Samsung was making toast or was toast. All right? And they pushed the stock down big time and just sold it out big time. Then came the Friday sell-off. What else was it? iPhone 7's going to the dogs. It's going to be probably one of their best sellers. So sometimes you got to go with your gut. Manipulation is key in this business. Machines do it so fast, you won't even know. And the key role of these machines are to keep you completely out of the trade so they can take the market wherever they want to go. And it's a fact. The machines are meant to destroy the few brain cells that you have left in your head as a trader. You think I'm kidding around? You know it. You deal with it every day. That's why I coined the term monkey on a hot tin roof. Traders who follow the MOHTR, monkey on a hot tin roof type of routine, will never take in the real money. Because just like a monkey on a hot tin roof, they will keep on selling every little tick down or every little tick up or buying every little major tick up. You go decide what you want to be. So the bottom line is Apple drew it out, red line resistance, nice candle developing. This is a daily, so it's an important chart. Upper end of the channel, that's how you read it. Upper end of the channel is around 107. Stock closed at 106. Right here, the stock closed at pretty much, yep. And it's a fair shot that the stock can, believe it or not, go to 111 just to complete this entire pattern. In the meantime, this is fantastically positive. Nice little, you can see that. Nice little move. I put a nice arrow here. Look at the time, the last time this happened, the stock went from exactly the same level up to 111. Why can't Apple go to 112? And especially now with the fact that Samsung I repeat, and I know it sounds stupid, burnt toast. Why can't Apple? Apple sales will probably skyrocket. I bet you people are lined up saying, hey, I'm an ex-Samsung user. Now I'm finally, coming back to Apple. That's serious. Anyway, so this tactical chart was posted for somebody to come and play their emotions and say, well, Apple did that 5 days ago and this and that. Well, that's their right to say it. I understand that part. I'm not going to agree with that, because what I'm trying to do, and this is one of the last things I'll say, is what I'm trying to do is train my brain to think in a very tactical basis, but at the same time keeping my feelings and my gut feelings intact. Markets are about gut feelings too. Over time, just the way you practice a sport or you practice a craft, you get to know it. It's called intuition or reflex, right? Sometimes when you're driving and you're about to hit the car in the front, your hand moves and your feet move faster than your brain does, right? Reflex action. Nothing new. So markets are like reflexes too. Sometimes you just feel it. But the way you do it is by constant engagement with the stock market. So that's really what it's all about. So there's really not much to explain. The reason I want to do this market update, and I'm going to, the last thing I'll do is give a quick idea of what I think might be going on. So, and then I'll just wrap it up. So here's your SPX. Here's Brexit. Okay. Just by the simple observation of the power move that we encountered today. Let me just remove all drawings. There you go. The power move that we encountered today, and there are no lines here. I'm not drawing any lines. Here's your Darvis. Upper end of the Darvis is very important. You put the Darvis box on your thing, because these things, upper end of the Darvis is at 2168. That's 10 points higher, which is nothing. The 50-day moving average comes into play right here at 2165. Upper end of the Darvis is 2169, rounding off the decimals. 34-day moving average is at 2178. And then you, of course, have the bloated high upper Bollinger at 2203. Let's leave that alone for now. These are the lines that the market wants to basically capture. What happens between 2176 and 2165? I repeat, what happens between 2176 and 2165 is going to determine the fate of the markets for the remainder of September. Don't take it lightly, because if we have a failure in this zone and the market basically croaks repeatedly, remember, failures don't happen in one go. Let's say we have a failure here, markets come down 50, 60 points, tries to go up, failure again, I can assure you that we will revisit 2000 real fast, real quick. Mark my words. That is not out of question for September. So don't get excited. Don't get overexcited. Manage your trades. Don't take oversized positions overnight where you can't handle the risk the next day. So that's my forecast. My forecast is this battle zone between 2176 and 2165 is going to determine the fate of the markets for the remainder of September. Now, just because it comes down here, it could basically have a inside day. Inside day meaning the body of the next candle is going to be inside this candle. Remember, we're not bullish engulfing yet. Bullish engulfing is when the candle extension is higher than the previous day's sell-off. If today's candle was like this, right, which is basically an outside day, it's just like it fell outside, then and bullish engulfing outside day, and then ended up here, then I could basically go out there and tell everybody, you know what, buy the crap out of the market. We are going to 2200. We didn't do that, ladies and gentlemen. Is everyone clear about that? Now, Lizzie mentioned one thing here because she doesn't have a microphone. She said, you did get your 500 down, like you said, very quickly. Yes, you're right. I did get my 500 down very quickly. And the speed and the ferocity of the move always surprises me, even though I teach people about it, I preach about it. It always surprises me. Just the way Brexit surprised me on the downside and the upside, this also surprised me, but I want to be in the action as much as I can despite the surprise. So thank you for mentioning that, Lisa. You're correct. So the point is, this zone here is the battle zone, okay? This is the demilitarized zone between North and South Korea. People who know a little bit about politics. So the bottom line is, we better cross this zone fast, because if we keep on bumping head into this zone, I can assure you it's going to turn into a nice little drop up here, which won't hold, and then a nice little drop down here. And I certainly want to be on the right side of the trade on that fall. But we don't know yet. But if it blasts through the zone, and moves higher, then the upper Bollinger at 2203 comes into play. Last thing I'll tell you, monthly options expiration on Friday, I've said this a zillion times, I'll say it again, is generally a bullish event. We have to be selective with our trades. We just can't randomly go out there and buy the same old stocks all the time. We can't chase prices all the time. We have to watch the internals. If for some reason the daily becomes overbought, you better stay away and stay short bias real fast. Because at this point, in one single day, we're almost getting overbought in the daily. You know what that means? That means the algos are just basically going to go, if we could basically stay in a trading range for the next 10 days, for all I know, this type of trading range. Just like that. No go, just the way we stayed in a trading range for all this time. Now that trading range broke down. Maybe this trading range breaks out. We don't know. Those two possibilities are there. Double breakdowns like this are somewhat uncommon. In other words, to get another 400-point drop immediately after a 400-point drop is somewhat rare, but these days, anything can happen. On that note, I will sign out. And thank you for attending. I hope all the stuff I'm doing is helping you out. And the only request that I have, as you know, referrals, give us a big, please, somebody mute the microphone. Okay, and give us a shout out when you can on any of the other trading forums if you'd like to. And we're growing nicely. I really appreciate every one of you who's there. And never take me the wrong way. I'm here to help. On that note, have a great evening, and see you guys tomorrow. Let's have a great week. How about that? But let's be careful. Let's be careful.
Thank you.
All right. God bless you all. Thank you.
Frank.
Okay. Anytime. Bye-bye.
Tomorrow.